Gents, I just want to pause the episode for a moment to let you know about the Strong Men of Value Academy. You will have heard me refer to it a number of times, and I want to bring more attention to it. So this isn't just a program, it's a life-changing environment and community of men who are focused on personal and professional growth. We're looking at areas of relationships, wealth, and health, things to help you thrive and maximize your life. Imagine having bi-monthly one-on-one coaching sessions with myself, weekly group coaching calls, and an incredible brotherhood of high achievers by your side. Now we're diving into resilience, leadership, and holistic growth to not just succeed in your career, but to thrive in your health and your relationships. Your journey to greatness, it starts here. So join the movement and you can apply for the Strong Men of Value Academy. You can head to themanthatcanproject.com to find out more.
2022 is here. Happy New Year for everyone tuning in, whether you're tuning in for the first time or if you're a long-time listener, welcome back. And 2022 is going to be very exciting, as I'm sure a lot of you have taken some time to think about what you want to achieve this year, or you're currently still working on goals. We do have an exciting free webinar for all of you gentlemen who are in our free Facebook group on the 10th of January, how to make 2022 your most successful year yet. So if you would love to be a part of that, all you need to do is go to the event in the group and click attending, and I'll go live then and there for that, which will be brilliant. And there'll be a bit more information coming soon. But gents, it's been a ripper start to the year, and very interesting start, actually. I'm currently in a makeup office where I'm not using my proper podcasting kit because our building where Amy and myself live, there was a big fire when we got back from the coast, and we're being moved out for the foreseeable future. So I'm currently still making podcasts, creating content without all my ideal things, but hey, that's life. Sometimes stuff happens, and the goal is not about needing everything to be perfect to get it done. You just got to do what you can with what you've got available. So that's what I'm doing. So this sounds a little bit tinny. I'm sorry, but I did record this podcast episode before that happened, so the audio quality should be a heap better. Today's guest, Myles Smith. Myles is a long time mate. We met in Uber, and he's episode 57. So if you would love to go back and listen to his story, it's a really, really interesting story. He's been a stockbroker for 30 years, and we don't necessarily talk too much about his story in this episode. I wanted to, and what I'm committed to doing for all of you guys throughout the first couple of months of 2022, I'm getting on real estate agents, stockbrokers, which Myles is a stockbroker, cryptocurrency people, to talk about different types of investments. Now, none of it is going to be investment advice for you guys, so please don't assume this to be investment advice. I want to expose you guys to various things that you can do to help you, give you that foundation to start going looking for more opportunities, because once again, finances is one of our main pillars within the Man That Can project, and financial stress is something that wreaks havoc in a lot of people's life. And I think that if I can, get some experts on here to talk about it, it may make you curious to then go do your own research, maybe seek out professionals in whatever space, or, jump on Google, jump on YouTube, do a whole heap of due diligence. As I always talk about, invest before investing. Invest in your own knowledge and experts to help you before you part way with your hard-earned cash. But today we're talking stockbroking. We talk about risk tolerance, so how to identify and manage your own risk tolerance, which is obviously really helpful. Mindset when investing strategies, and how much you need to start are a few things that we talk about in this episode. So it is going to be hugely beneficial for those who haven't really been in that space, or for those who just want to even brush up on a little bit there. Myself, I've invested heavily in cryptocurrencies. I've got property and a little bit in the stocks. So once again, I'm interested in all of them because I think the power of having your money work for you is hugely exciting. But I also know that everything could be lost. So I understand that I only part way with what I'm prepared to lose, because once again, markets and all this sort of stuff have their own funny way of doing things. But to do your risk management, make sure you research more and seek expert advice. But before we dive into this episode, gentlemen, I just want to, invite you guys to jump on that webinar, but also invite you to join us in the Strong Men of Value Intake 1. I think we've actually got 28 applications already, so we're over, but let's see if they all get moved through. But I'll be accepting applications from the 11th, the day after the webinar, and we kick off on the 17th of January. And this is a community for men who want to be around like-minded, high-performing blokes. They want to improve various areas of your life over a 12-week period. And should you get a heap of value and should you want to stay in it, you're more than welcome to, and you'll be able to stay into it for as long as you want. We've had guys who have been a part of the Strong Men of Value for over 2 years and are deemed leaders within our community. So it's definitely somewhere you want to be. To apply, you just head over to the manthatcanproject.com/strong men of value and just go through that application process, and I will be in touch with you. But gents, please leave a review, whether you're on Spotify or Apple Podcasts. Take that extra 90 seconds because this show and the Man That Can Project grows from your guys' support. And by you taking that extra 30 to 60 seconds, it helps iTunes or Spotify know that there's value in the show, but also your mates. So definitely keep sharing it. Word of mouth is the best. You guys are champions. Let's rip into this episode with Myles Smith.
You're listening to the Man That Can Project with Lachlan Stuart, a global movement created to empower men and open up what's really going through their minds by having real and raw conversations about life's unique challenges and our individual ways of processing it all. Welcome to the Man That Can Project.
Welcome to the Man That Can Project podcast. I love how I always drag out the podcast. Today, Myles, the showman, Smith, is back. Great to have you back on, brother.
Thanks, mate. Nice to be here.
So for those...
After a long hiatus of 3 years.
It's been 3 years. Oh, it's funny. Literally, you were episode 57, and I re-listened to it this morning. So it's funny. This is how long ago it was, because this was before I'd changed the name to the Man That Can Project podcast. I was running with WellFit just because I was like, I can't have that aligned.
WellFit.
Because anyone who's been following for a long time, I was originally Lachie Stuart coaching. Then I was like, I need a different name so I can hide behind something, and went WellFit. And I was like, don't really like WellFit. So then eventually we came up with the Man That Can Project, which is where we are. Yeah. Here's a little snippet of Myles and I talking years ago. Let's see if we can hear it.
Recreating who you are. Like, just start with the simple stuff, and if you're disciplined enough to do it by yourself, awesome. But it's
I can't even remember what we were recording on.
Do affirmations. Like, if you think they're lame and
let's get a little bit of Myles.
A question to an answer.
Yep.
We recorded that one in your office in the city.
Yeah.
But for anyone who wants to learn a whole heap more about Myles' journey, and we met in Uber when I was Brisbane's finest Uber driver. I've met some great people in Uber, and I was very fortunate. I was thinking about this morning when I was actually listening to this episode. So when I first met Myles, I was in a not a very good financial position, and also I was trying to re-establish who I was as an individual and what I was looking to create. And you were someone who jumped in and were a highly successful individual, obviously in stockbroking. So when we kept bumping into each other in Uber, and then we started chatting via text, and eventually you got your ass onto social media, for me, it was like that imposter syndrome, and it's something that I speak about regularly, but I always wanted to have access to successful people in various areas, and for you, you're that financial area. And I always asked myself, what do I need to do to be valued and respected by people that I value and respect, where they ultimately want to spend time with me? And that's always been one of the big drivers for me in my own personal development and growth, because I think ultimately when you hang around successful people in whatever area that may be, you learn so much more. You learn how they think, what they do, minute by minute, which are generally the 1%ers that help you achieve a result. And I think a lot of us, our environment shapes us. And if your environment isn't shaping you into who you want to become, or if currently you aren't who you want to be, or you don't have that life you want to create, you can definitely change your environment, but it has to start with you. And I realized that early on, and that's why I was Uber driving at the time. 1, I never wanted to work for someone. 2, I needed to improve my communication skills, and we've built an incredible friendship over 7 years now.
Yeah,
which
7
is
years.
Wild.
Unbelievable.
You were at the wedding. You were probably the drunkest man at the wedding.
I was.
Mr. Fireball, which was pretty impressive.
Exactly. 47 going on 27.
Bloody hell. Yeah. But Myles, obviously you've been a stockbroker for 30 odd years. So what we're going to talk about today gentlemen, is stockbroking, is investing, and how to get started. Because, and before we do, disclaimer, this isn't going to be any financial advice or anything like that. One of the most important things we continue to talk about on this show is taking ownership and taking responsibility for your life. So don't sit here and go, Myles said this or Lockie said that. Go do your own due diligence. If you don't really know where to start, seek out professionals. Start on Google stockbrokers, investing, various other things like that. But make sure you get the support and advice that you need. Also, continue to challenge the support and advice that you get so that you're comfortable with your own decisions. And we'll talk a bit more about that shortly. But I just want to throw that out there. So anything that we talk about here, we're speaking about our own personal experiences and stuff that you've learned over your years in the industry. And I'll probably share stuff that I've learned since I've been investing in things, which is very important.
Yeah, I think the thing is that this is going to be investing in its simplest form.
Yeah.
Do you know what I mean? This is sort of a stock market or stockbroking investment 101.
Yep.
And this is just going to give a slight insight into some of the things that I do on a personal level and that of my clients to, hopefully get them good returns, over a sustained period of time.
What do you, just quickly before I go back to what I was saying, but what would you consider as a good return? Because in the time of Bitcoin, right, and cryptocurrencies at the moment, people are expecting like 100% returns in a day or 200%, 1,000% returns because we've seen what Bitcoin and stuff has done, but that's not normal.
That's not investing.
That's not, that's
gambling.
Yeah, that is 100% gambling. I've got a book over there called The 16% Solution there, and Warren Buffett and all of that, they strive for 16% over a year.
Per annum.
Per annum. But even that is still amazing.
Yeah, that's right.
So
what I generally aim for is somewhere between 10 and 12%.
Yep. So
that's on average, okay?
So to put that in perspective, if you're investing $1,000 this year, if that's what you've got to play with, you're going to make $100 on it.
That's it.
Correct.
So 100 or 120.
Yeah. So you're looking at.
But then what I do then, sorry, can I? And then, but then what I do is with that 1,100, right? I invest it again.
Yeah, reinvest. So you're looking for compound. Right?
Compounding, right? Yep. So historically speaking, there's actually a mathematical theory around. It's called the rule of 72. Okay. So what that means is that if you want to double your money, right? And you want to do that in a 6-year period. Okay, you go 72 divided by 6 equals 12. Okay, so that means that $100 investment, right? If you get a 12% return
over that 7-year period, or
6-year period, you'll double your money.
Cool.
So if you compound,
is that a 12% per annum or 12% over that 6-year period?
No, 12% per annum.
Yeah, cool.
Yeah. So what you do if you say you're want to double your money in 2 years, right?
You need
36, right? So that's called the rule of 72.
Yep.
So if you want to double your money, right, you pick a time frame that you want to do it by and divide that into the number of 72.
So I would imagine though then, let's talk risk.
Yep.
Actually, before we talk, let's pinpoint risk and we'll pause there. Gents, the reason why I am so excited to have Myles on, apart from him being a great mate, and I know it's going to be an incredible conversation, is money or finances is one of our 8 pillars. And I also know how many people out there, and I've been under a lot of financial stress before, it can just have such a negative impact on so many people's quality of life. And I believe that we should all be educated in ways that open our mind to go do further education around that, on how we can create financial, whether it's just financial security, financial freedom, financial independence, depending on we're all at different stages, right? And I think it's very important to know that. But when we establish where we're currently at, we can build layer upon layer from that. And going back to the risk, and why I want Myles on the show is because I think we're going to have stockbroking. You're going to talk about investing in the stock markets.
Yep.
In upcoming episodes, we'll have people talking about crypto.
Yep.
Then we'll have people talking about real estate. And some very, even starting your own business, because that's an investment, and investing in yourself, which is what ultimately we always talk about. But by introducing you to all of these, you can then go, oh, that really excites me and also interests me. I'm now going to go look at that further, because that's what I think you should do. Because I wasn't even aware that you could I'd heard of the stock market, but I'd never really understood that by investing in other businesses, you can make your money work for you.
Yeah.
That's fucking crazy.
Yeah, 100%, and I think that's the key, is that people go, I'd like to go and open a coffee shop and sell coffees, do you know what I mean? And that's very much what I identify as being a Me Too.
Yep.
Right? There's Me Toos everywhere. Gyms, coffee shops, restaurants. What I am looking for in terms of where I put my money is a Me One, right? If you look at a lot of the largest stocks listed both here in Australia and also that overseas, they're Me Ones.
Yep.
Okay? And what I mean by Me Ones is that they are businesses where they don't have any real competitors, right? They're like a monopoly.
Okay.
So Facebook, Twitter, Instagram,
Amazon,
Domino's Pizza here in Australia, CSL, Cochlear.
Yeah, you've been talking about Cochlear for a while.
Yeah. So all these businesses are Me Ones, right? They have maybe one or two peers at most.
Yep.
And being a Me One, where your product is basically the only product that people can buy in that space, that allows you to increase the price of that product when required or when needed, right? Which allows you growth.
But if you're generally looking at Me One companies, for example, like you've said Facebook, the share price is generally a fair bit higher, right? I know for me personally, when I was starting out in with investing and I didn't have a heap of capital to play with, I generally steered clear of those ones because I was like, the share price of that is $1,000. I can't even buy one share at the moment. So I was looking for the smaller cap or smaller pricing sort of shares to get in, because obviously for me as well, with how my brain works, I'm like, if I can own more shares and the share ticks over even by a cent, for example, that can be a higher return. Whereas obviously then if you're looking at one share at $1,000 and it goes to $1,500, that's also a good game, but you don't own as many shares. So I think, but obviously you've probably got a decreased risk, and this is bringing us back to the risk because I think everyone, when they're looking at investing, or with most things in life, they have different risk tolerances. I think it's very important to, and we could probably talk on mindset around this, but I guess being aware of what your risk tolerance is. For me, I am probably, I don't like to fucking throw Hail Marys and just not do my research on things and hope that it's going to make me $1 million overnight. Like,
hope's a bad investment strategy, isn't it?
Exactly. And that's why people fall short. But I've got some pretty solid investments, and and we'll talk about probably what you should look at when you're investing in companies and or whatever it is that you're investing in. But I look at things that it might be a slower burn, but in 10 years' time, your $1 might be $3. And while it's not on paper, some people go, no, I want to turn $1 into $1 million. So I'm happy to turn $1,000 into $3,000 because I didn't do anything with that money. I just put it somewhere.
I think with, and this is the case with the introduction of cryptocurrencies and Bitcoin, is that expectations have become, instead of a 6-7 year period, right? They've become sort of a 12 months.
Not even people are wanting it.
And that's society in general, isn't it? Like with text messages and emails, everything, everyone's instant gratification. So I personally, and this could be an age thing, I personally can't see that that's sustainable in terms of those returns. And, I'm not going to sit here and, later on we'll talk about, I invest in things that I understand. Do you know what I mean? And I'm not going to be a proclaimer or proclaim that I understand cryptocurrency or Bitcoin much at all. But for me, that's the reason why I stay away from it, is because my understanding of that product or that asset class is not
where you feel comfortable.
Where I feel comfortable. Do you know what I mean? It doesn't. For me, it's it doesn't provide a dividend. I can't really value you can't value Bitcoin because Bitcoin is valued upon what someone wants to pay and what someone wants to sell. Do you know what I mean? It has no intrinsic value. Do you know what I mean? So, for example, you can work out with listed companies what their intrinsic value is. Do you know what I mean? But Bitcoin doesn't produce anything, so I can't work out with certainty what it's going to be, what I believe it should be valued at in a 5 year time frame.
It's more based off human psychology, right? Like,
yeah, exactly right. Like as I said, I know very little about it, but yeah, I believe that. Yeah, I could not tell like I've been asked in the last 4 months probably about 20 times whether a person should invest in Bitcoin or cryptocurrency, and it's all right. See, that's creating it's a FOMO trade, isn't it? The fear of missing out.
It's a FOMO trade.
I could not tell someone with any certainty or any knowledge at all to invest in Bitcoin. I've been saying no, to be honest with you, because it's all right if you invested at $1. Do you know what I mean? But at 80,000, I can't see that risk reward factor. Well, I can't see the reward.
Yeah, exactly. And once again, I think depending on where you get your information from, I think especially with a lot of the cryptocurrency stuff, because I've got a fair bit of crypto.
Yep.
A lot of it are just spruikers on YouTube who are also building a YouTube channel, right? Yep. So they know the right keywords. They know how to market themselves so that they get higher engagement, they get more followers. And I think it's really important to understand that when you're trying to get information on anything. And it would be the same in stockbroking, in real estate, even in my industry, in coaching and stuff. There's people who just spruik shit and are absolutely useless and have very poor advice. So when we do our due diligence, okay, well, this guy is saying 100x returns on fucking Dogecoin or whatever thing it is, but it's like, okay, well, am I just getting lured in? Do these guys have a finger in the pie already and they're just going to dump it? We're all going to lose our money? Because just on this current drop at the moment, I know heaps of people who bought in now, and it was still high in the market. It's dropped 30%, 30%, and they're fucked.
Yeah, that's
Whereas
right.
I got in 2017 and then also 2019, so I'm still way up. So even though the dips are there, it's like I'm safe.
Yeah. I was looking at that Dogecoin, and there's a couple of what I would call red flags around it. Do you know what I mean? Like, its market capitalization, right, currently is probably, I think, about $30 billion US. Right? Like, that's bigger than Twitter. That's bigger than General Electric.
Yeah.
That's bigger than Merck.
But this is what I find very fascinating. I was only saying to Liam the other day, like, cryptocurrencies are doing something that I haven't seen done in any other industry before, and they are building communities because of financial incentive. A lot of the cryptocurrencies don't even have a fucking product yet.
No.
Like, literally, you're investing in an idea in product development. These guys could literally go, didn't work, thanks for all your millions or billions of dollars, see ya. Literally, they could do that tomorrow. We're investing in an idea, and a lot of people aren't even researching the ideas. They're looking for Hail Marys. They're looking for the next Dogecoin, the next Shiba Inu. These ones that are going to do 17,000%.
But I don't know how they can say they're going to do 17,000%.
But once again, this is just because OneCoin's done that.
But I don't know what their basis is on. If you ask someone, why do you invest in Dogecoin?
Purely.
What do they say? Oh, like I had some guy say, because of the subsystems in. If you ask 99% of people, they would not know the answer. They come up with some regurgitated spiel
of course,
that it's going to be this and that, where there's no justification. What I'm saying, when you look at a company like BHP, Domino's Pizza, there are earnings.
Of course. They've got to show their growth quarterly, and you've got to give reports.
Right. It's transparency.
But
do you know what I mean?
That's what I mean. A lot of people with cryptocurrencies are investing in an idea that they're going to get wealthy. It's not even the idea of the project itself. Like you said, a lot of people don't know what any specific project is aiming to achieve.
Yeah, that's right.
So therefore, you're just throwing money, hoping that it has this potluck chance that you're going to become an overnight millionaire, which... If that's how you want to play the game, cool. But
that's exactly right. That's
also,
up to you.
You need to understand, the way I always think about this, Myles, I know how much I earn per hour. Therefore, if I'm going to invest $1,000, I know how much of that time, how much of my time, it's taking me to do that.
Yep.
Am I prepared to give away X amount of hours of my time in a gamble, or would I rather put it into something that over 6 years can give me a good return, or over whatever, depending on my risk strategy at that point, and whether I'm trading, gambling, or investing, that's then what helps me make those decisions. But a lot of people, once again, and this, going back, tying this in, is people are they really want financial security, because a lot of people don't have choice in their life. A lot of people are sick of the grind. They want something different, and they are hearing all these ways. For me, and don't get me wrong, I'm not criticizing anyone here, because for me, before cryptocurrency was a big thing, it was network marketing. That's what I got exposed to first, where I saw people who had relatively started a business with relatively low investment and skill, were then making millions of dollars, or even hundreds of thousands of dollars. So that drew me to that industry.
Yep.
So I can definitely see how there's people who maybe are on $20 an hour, $30 an hour, and they see these people put $100 here or $1,000 here, earn a lot of money. That can be very
enticing.
Oh, fuck yeah.
Yeah.
But you're missing the process that goes in between that. Yes, there's luck, but if you want to be a real investor, and if you want to create sustainable wealth and be able to do it time and time again, you've got to have strategy.
Exactly right.
And that's where you come in.
Exactly right. That's exactly right.
We can get off cryptocurrency for now.
Yeah, but it really is the cryptocurrency and Bitcoin, it really is the buzzword at the moment. And I think whilst you were talking about that, Lockie, sort of had a bit of a light bulb moment in terms of, we're talking about that instant return and that large return. Yep. You know what I mean? Over the past 10 years, the best asset class to invest in has been cryptocurrency or Bitcoin.
Yeah.
Right. Its returns have been phenomenal. So what it is allowing, what a lot of people see is, I think there's a large correlation, right? Instagram, Facebook, all that. They want to be keeping up with the Joneses. They want to be the next Kim Kardashian. They want to be the next whatever, Gary Vee. So they want to achieve, to get there, they need money. Do you know what I mean? And they want that lifestyle. So I think it probably, there's a bit of an association there in terms of wanting to be,
of course, and
looking good, wearing the best clothes, drinking the finest champagne at a young age. You know what I mean? But everything like that takes time, generally speaking.
Yeah, definitely. And if you are one of those people who are fortunate, and I have a client who did a fucking 10x on a mining or a gas coal company this year. Put $100,000 in, now worth $1 million.
Yeah.
Fuck, that's awesome.
Yeah.
Right. But if you're in a position where that does happen, if you aren't upskilling, if you haven't put strategy, understood money and all that sort of stuff, you're going to blow it, because it's like winning the lottery. The statistics is like,
that's right.
67% of lotto winners in the States are broke within 3 years, right? Yeah. So I think regardless of even whether your risk tolerance is high, and you're looking for those quick, large returns, you still want to have
the education.
The education behind you, so that money, because so when I invested first in cryptocurrency, I got scammed a fuckload of Bitcoin. And when I say a fuckload, I'm not talking over 10 or anything like that, but it was a fuckload for the money that I had at that point. Yeah. And I dipped out of it for a while, and then I got back into it. And I've made like extremely good money off it. Yeah. But where I feel I'm working well with it is I've, bought a property. I'm leveraging that stuff and putting it into more stable investments as well, because the market is crazy. Yeah. And I know from an emotional standpoint, if I watch it and I've got money in very volatile places, which the whole market really is at the moment, it can be emotionally fucking crippling.
Yeah. Exactly.
Back in March, I had ridiculous money, and it just went, and I was like, but I was still lucky. I got in at a good dollar cost average point that I was still up, just not up as much. Whereas a lot of people are getting in later and later, so that when the crashes happen, they're in the negative. So I think be very mindful with, once you go in with a plan, right? Even whether it's in traditional shares, whether it's in cryptocurrency or real estate, it's like, what are you hoping to achieve from investing this money? Yeah. Are you looking to get a good dividend? Yeah. Are you looking to For me,
Capital growth.
capital growth, yes. Are you looking to, when it gets to a certain point, are you going to cash out? Or because some people as well can get greedy, right? You might see the growth, for example, and you might get a 100% gain over 3 years.
Yep.
Right? For example, whatever you're investing in, and you go, it's going to keep going. And then it crashes.
Yeah, yeah.
So when you go in, have a plan and stick to it, because once again, that first investment isn't going to be the last. So if you can get a 100% gain, or if you can get a 16% gain like we're talking about, reinvest it.
Yep. Yeah, that's the thing, and that's the thing. Your investment, right? I believe that you need to have a few key strategies or rules that you go by when investing. And I think the first one, and this is one that people will, may struggle with, is that it needs to be forever. So my rule is when you invest forever.
Yep.
So I know that might seem, hard to fathom, but what that does is a couple of things, right? Over time, right, time smooths out volatility, okay? So the market might go like this on one day, that on one day, but over a period of time, over a 5, 6, 7 year period,
it's still up.
It smooths out, right? Yep. Those bumps and peaks and troughs, they become one line, okay? So historically speaking, we know that the stock market returns on average over the last 100 years somewhere around 10 to 12% per annum.
Yep.
Right? 1 year it might go up 30%, next year it might go down 6%. But we know that over time, that's what it averages, okay? So you don't need to have an IQ of 160 or 130 or whatever to invest in the stock market, okay? What you need to do is give up time, okay? And that time, we're talking about that rule of 72. If you invest in the market over a 6 or 7 year period, all right, your money will double. Fact.
Yep.
Okay. Then, if you can add to it along the way, then you're going to get Moore's law, which is like double compounding. Do you know what I mean? It accelerates. It accentuates.
Yep.
So the more that you can add to it, not touch it, let those dividends, let that capital growth compound, all of a sudden, in 10 years' time, right, your initial investment is going to start to really take off. So, but the thing that happens along that way is a lot of things. One, you get scared.
Yeah.
You know what I mean?
Yep.
Human emotion.
Yep.
2, you need the money, right?
Yep.
3, I don't know, you want to go on a holiday or something like that. So the discipline around investing is one of the keys. Investing's easy.
Yep.
Right? It's about time in the market. Right? It's not really
it's like time
about
in anything, right?
That's right. Exactly. Like we're talking about Bitcoin. I was thinking, there's this saying, fast money blows and dwindles. Do you know what I mean? And it's that's what you're saying about people who win the lotto. You know what I mean?
Yep.
You get quick, easy money.
Yep.
You treat it like quick, easy money.
Yep.
Money that you have to work hard for, you generally cherish it.
Yeah.
Do you know what I mean? So going back to the investing, I remember Warren Buffett was saying that when he passes away, his advisors or his trustees of where, all his money will be left, they have been told that all they have to do is put the money into equities, okay? And that can be via an ETF, right? An ETF is an exchange-traded fund, okay? So what it is that, say you have as little as $100 to invest, okay? There are things listed, these ETFs or spiders is another terminology for them. You can go and buy an ETF. The code might be, I don't know, BBX ETF or whatever. But
that's the code.
Well, I don't know what the code is, but if you want to know, you can ask Lockie and he can let you know. But or you can look it up on the internet. But and what you do is you go and invest. You go and buy a share in an ETF, right?
Yep.
And that ETF goes and disperses that money across the whole of the stock market.
Yep.
Right. So each company has a market capitalisation. So BHP is going to be bigger than, I don't know.
The Man That Can project.
The Man That Can, you know what I mean? So it might make up 16% of the
ETF.
Of the ASX, which is the ETF. So 16% of your $100
So $16
goes into BHP and then CBA, Telstra, et cetera. So what happens then is whatever the market returns for 2021, that's your return. You can keep it there and you can keep adding, buying shares in it, et cetera. And then if you want to sell, you can sell and get the money within 3 days or 2 days nowadays. It's T+2. But, the market is, if you feel, picking stocks isn't easy, right? I'll go through how I pick stocks, which I touched on at the start of this podcast, but picking stocks isn't easy, right? So the best way that an individual who believes that they don't have the capabilities to pick their own stocks, or they don't want to, invest in, a stockbroker, they can simply go and buy an ETF. As I've stated, the market over the last 100 years has returned, on average, per annum, around 10 to 12%, right? That means you will double your money, as I said, every six to 7 years, 6.5 years, whatever. Then if you add to it along the way,
it's even better.
So that's
pretty simple.
It is simple, and everyone says to me, "Well, why don't people do it?" And it's because of humans and their risk tolerance.
Yeah, isn't it? And also the impatience.
That's right.
So I'm 30 now. I started investing when I was 26. I wish, and one thing I'm going to do for my children is start from the moment they're born and I've got their name, I'll have an account set and I'll put in X amount a week.
Yeah, $20 a week.
Because you think about that, like, if you got a calculator out now,
and
if you did 2 plus 2 is 4, 4 plus 4 is 8, 8 plus 8 is 16, and just kept that going over year upon year, the ROI by the time someone's 18 is going to be incredible. But I also don't want that to deter people who are maybe 30, 40, 50, 60. You can start now.
You can.
And generally, the older we are, the more cash reserves we have to invest, right?
Yep.
So as you said, it doesn't matter. I had fuck all money when I first started investing. Literally, I was doing like $30 bits. And so back in 2017, I was doing this Bitcoin thing. I was putting $25 here, $25 there, and it obviously grew.
Yeah.
But as you said, with your ETFs, you can put $100 in there. What if you did $100 a month? It's $1,200 a year.
Yeah.
Awesome. You don't, if you're getting 10 to 12% on average per annum, it's good growth, but over 10 to 20, 30 years, that's going to set you up. And generally speaking, like, you won't really miss $100 a month from your lifestyle.
Yeah. And that's another thing. Like, I've seen, and this is something that I've been toying with for the last probably 18 months or 2 years since fintech's become large, iPhones, et cetera, was there's already one out there in terms of what's called Raz now, isn't it? It used to be called,
which
I forget what it used to
be. It used to be Acorn or something.
Acorn, that's right. And that's where people can have $10 or $5.
It does all the roundups. You link your bank account as well, and say, for example, it's $10.55. It'll round it up to the nearest dollar and put it in that
in the account. Or you can have $5 a day set up to go into Raz or Raise, whatever, and then or $10, $20 nominated amount, or you can do it weekly or fortnightly.
And it shows you projections as well, which is pretty cool.
Yeah, I think personally that is a great idea. And I don't work for them or anything like that, but it's creating awareness, knowledge, for sort of the everyday investor, or getting them started, as much. So and that's something that I've been actually thinking about doing, setting up maybe a platform like that, going forward, where sort of the everyday, mums and dads can, invest in the market and get those returns that, that I've been, talking about. So
one thing I think that's important to also throw in there as well, if you aren't going to invest the time to upskill yourself on all of this and invest the time into it, because you did say earlier, it requires time, right? Or money. Yeah. And if you're not prepared to invest in an expert in the industry, like a stockbroker or something like that, don't be upset if you're not getting the results or the outcomes that you're looking to achieve. Everything requires investment, and it's not always money. It might be time to do that. But I think on the topic of investing, it's really important to understand why you're investing, what you're looking to get out of it, as I mentioned earlier. But for me, the one thing I've always known since 2014, and even listening back on our podcast from 2018, say the exact same thing, is I just want choice flexibility so that I can be a present dad when that time comes, and I don't want to be stressed about money. And I've created that lifestyle for myself now. I've got a really good cash flow business, but I've also got some unbelievable investments there that allow me to have the flexibility when I decide to step back a little bit. And so I think it's really important to understand why you guys would be doing this, because then when you part with $100 a week or whatever your investment strategy is, you can go, all right, this is what I'm working towards. And mine's still always a 10-year play. Like even now it's a 10-year play. So then I'm not inclined to look at it and go, oh, there's nice cash there. I could go on a cool holiday. That money to me doesn't exist.
And that's the way to, and like I know I said your investment has to be forever, right? But the 10-year minimum,
I probably mightn't touch it in 10
you
years.
might. Yeah, that's right. But as a minimum, I think that's really good. Do you know what I mean? I was thinking, just going sort of back and forth. I was thinking about risk. Okay, and we're talking about Bitcoin, cryptocurrencies, and then other asset classes, right? Personally, risk comes, I believe, right, when you don't know what you're investing in.
Yeah.
Right.
Well, that's how you minimize risk.
That's right. And if I, as I said, like if I go and ask someone about why they've invested in crypto, do you know what I mean? They might give me some spiel, right? But it's not the truth. You know what I mean? In terms of their understanding of it. Like has anyone ever seen the blockchain? That's what.
No, when you said that to me earlier, I was like, has anyone seen the cloud where our files are stored in? No, but it's a fucking incredible tool.
Yeah.
Like, once again, I come from a place because I'm heavily invested in it that I really enjoy it. And I understand some projects and some I'm just like, that's complete fucking scam. And I also believe, and I've said this to you multiple times, this 2 to 3 year window for me is why I'm really heavy in it, because I think as regulations come in and stuff, it's going to be, those returns are going to flatten out. But I'm not in there to get huge returns. I'm just there to get my 16% or whatever. And I'm cool. Like, that'll be fucking epic. But I also think, and I think I've always looked at life this way, hence why I did network marketing, hence why I run my own business, is like there's always opportunity in things that are taking the world by storm. You look at the internet, you look at the stock market in the 80s or 70s or whenever it was pumping, like there's always that sweet spot. And I believe that's now. But I also believe in every sweet spot, a lot of people get fucked over because they don't do their due diligence and they just go, I'm going to throw a heap of money here and hopefully something works for me. And that's just fucking dumb. Like you got a whole lifestyle to create for yourself.
That's right. I think the thing is that going back to the risk is that if you don't understand 100% or close to 100% of what you're investing in, then don't do it. Don't do it.
Ask more questions. What am I missing right now? What's the opposing argument for what I'm investing in? So you can understand both sides.
If you see most people in life who have done well, what they've done, and this is very simplistic, something that they're good at, right? They've done it the best. Do you know what I mean? Like if you look at sportsmen, if you look at Warren Buffett, if you look at Bill Gates, if you look at Jonathan Thurston, if you look at Roger Federer, they've just been the best at in a field that they know. Now, we all can't be good at everything, right? So that's the reason why you need to find something you understand
and enjoy,
and then invest in that.
And generally, my belief is that investment starts with self, right? Because going to the stock market, once again, there's a lot of people who've heard about it and who've wanted to do it, but they haven't done it because their mindset, they might have limiting beliefs around, what if I lose money? And it's like, well, you've just missed an opportunity. Rather than just getting in the game and going, well, I trust myself that I've done enough research, I've spoken to the right people, I understand how this process works, that I can get in. And I also trust that if I lose that $100, it's not going to destroy my life, if that's your risk strategy. Where for me, every year I invest more money in myself than I do in anything else, whether it's attending courses or time. I invest a lot, obviously listening to podcasts, having conversations like this, reading books, because I know that the more I upskill myself and understand things, that can be moved across to other areas of my life, which can help give me greater understanding and help me make better decisions for me to get an outcome that I'm looking for. But a lot of people don't this is a great quote. Invest to invest.
Yeah.
Which simple. If you don't understand investing, invest into understanding investing.
That's exactly right. Or pay someone.
Yeah.
Do you know what I mean?
Yeah, or pay someone.
It's like everything, you know what I mean? Like, I pay you to help me train.
Yep.
Do you know what I mean? Both body and mind.
Yep.
Which allows me to be the best person that I can when I turn up to work every day.
Yep.
So, I think that you need to really understand the product that you're investing in. And if you don't, well, then that's when you get a broker, you know what I mean?
Yeah.
What people have got to realise is that the stock market is not the casino. Do you know what I mean?
Yeah.
Like, it is not. Do you know what I mean? We aim, or I aim, or advisors or stockbrokers aim to identify stocks that in 5 years' time will be earning more than they are today.
Yep.
And that is for a large majority of stocks.
Yep.
You know what I mean? You can speculate on, as you said, your mate who made a 10-bagger on the hope that they might find gold in the Pilbara or something like that. But what I want is certainty in my investments and in my investment strategy. So what I do is that I look at, stocks that, as I said, are a me one, then that have that pricing power. That is in the future has a product that is still going to be needed, and even more so then than it is today. Do you know what I mean? So, and that, as I said, you can see all these, large tech companies like Facebook, Twitter, Instagram. They're all the stocks of tomorrow. PayPal. They're all sort of me ones.
Square.
Aren't they?
Yeah.
Square. Yeah, exactly. So what you need to do is try and identify stocks in that embryonic stage.
Well, even look at Zoom, right? Zoom in COVID, boom.
Yeah, and so did Domino's.
Yeah.
Do you know what I mean? Like Domino's went ballistic because everyone was staying at home ordering pizzas.
Pizza, and everyone moved Zoom because everyone went to online meetings. I wish I'd stepped back and thought about that.
Yeah. That's right.
And that's, I think where that time to even think, just sit back and think, is so important to us. Once again, a lot of us don't invest or make poor investments because we're so busy and we just do things without really thinking about it. Just slowing down. One of the most, Warren Buffett reads for 6 hours a day and just sits there and thinks. Yeah. How often do you guys think a day?
Yeah.
I guarantee you might be having a heap of racing thoughts on the go, but how often do you just sit there?
Yeah.
Just ponder.
Yeah, that's right. Yeah, you need to. I think the reading is is a key aspect, and as it's a common name that keeps coming up. As we said, is Warren Buffett, and if you can read one or two of his investment books,
I do have a few. I've got too many books there.
I think I gave you the best book that I've read by Napoleon Hill, which is Think and Grow Rich.
You did.
I think that's probably the basis, not only for I don't want people out there who are listening to think that it's an investment book, because it's probably an investment / life skills book.
Definitely.
That it tells you how to live your life and how to invest, and they're very much on the same sort of level.
Same as the monk who sold his red Ferraris. A great one.
Yeah.
I can't read this that far, but
it's very simplistic. Do you know what I mean? In terms of investing, you need to be selling more apples or bananas than the guy next to you. Do you know what I mean? So that's
so. All right, let's just summarize everything that we've spoken about over the last bit. But I'm coming to you, or I'm someone who's never invested in my life, and once again, like we said, you don't need to have tens of thousands of dollars to save to get started in investing. I think it's about understanding what your expected return would be. Obviously, the more you invest, the larger the expected return, even if you're looking off that 10 to 12% per annum. Okay, if you invest 10,000, 10% of that would be an extra 1,000. So your balance may look like 1,100. That's assuming you're not putting anything else in monthly or weekly, right?
Yeah.
As opposed to if you put in $100, it's going to be $10 at the end of the year. But when you still put them next to each other, it's the same growth.
Yep.
Okay, so ideally, if you've got more capital, cool, do that.
Yeah.
But you can start with, what is the lowest you can start in, like an ETF or something like that?
Oh, an ETF could be 100. Yeah,
cool. So if you've got a spare,
there will be costs associated with buying that
of course.
that you get charged. Might be $20
trading fees
if you go through ComSec or E-Trade
or Bell Potter
or Bell Potter. Yeah. But see, Bell Potter, like that, they've got a great setup.
Yeah, well, that's what I used.
Yeah, and I do a bit through Bell's. I think it's Bell Direct, and their product's very good. So, and they've got research reports, everything.
Yeah,
and they'll give you. I think they might even, give you stock portfolios.
Yep.
Do you know what I mean? So when I say a client comes to me and they say, I've got $1 million.
Yep.
Right. What I do is I draw them a triangle. Okay, and I put 50% of their money, right, which is 500,000, into top quality blue chip stocks.
Yep.
Right. Then the next 40%.
So what's a blue chip?
Yeah. So a blue chip is a mature company.
Yep.
That would be classified as very, very low risk.
Yep.
It'd be something, like your CBA, your BHP, your Rio Tinto.
Yep.
They'd be classified as your blue chip stocks.
Yep. Okay.
Right. So I create this triangle with the base.
Yep.
And that 50% of that, what they've given me, goes into that base.
Yep.
That creates a solid foundation for their money.
Gotcha.
Right? Then 40% I put in growth stocks. Those growth stocks are the ones that I've been talking about, like your CSL, like your Cochlear, like your Domino's, like your Reese Plumbing.
Yep.
They go in that middle part of the triangle, right? So up to 90%. Then 10% goes into what could be classified as a punt.
Yep.
It might be in that gold mine in the Pilbara. It might be in that, coal mine in Townsville or whatever, right? And if I am lucky enough to make a lot of money up there, what I do is that I take that money and reinvest it down into these next two levels, because otherwise the triangle, when we start like that, can go like that and then it falls over.
Yep.
Right? So what I want to do is when I make money up there, like you have done with your Bitcoin, take off the top and invest it in here and keep creating a strong base.
Yep.
Right? So I go 50, 40, 10.
Yep.
Right? And when I make good money up here and even here, I go and keep putting it down in the quality stuff, because I know that over time it's just going to go do. And it's a solid base for my clients.
That's the kind of stuff that most of us are looking for, I believe, because I feel so much more. It's a lot easier for me to make decisions around my business and also my lifestyle, because I know I've got some good investments there to fall back on should stuff go south. But I want to avoid that. But it's also going, okay, I want to continue to beef those up. So every time I do have obviously even with business, when there's a big chunk of money come in, it goes, obviously I got to keep my stuff for taxes and various other stuff, but then I put another chunk in.
Yeah. So that's sort of what I go. I go the speculative at the top.
For those who are watching on YouTube, we're giving you a little visual here, handwritten by Myles. We should turn that into a
NFT.
NFT for those in the crypto space. But the speculative is a 10% at the top. So if you're picturing your triangle, the 40% in the middle is the growth, and then the 50% at the bottom is the blue chip.
The foundation stocks. So because if I don't, when this balloons up the top here, what would happen is that the triangle all of a sudden becomes out of whack, and then what happens is there's no base there, so it falls over. So when I make money up here, I then pump it back into the bottom two areas that I believe there's more safety and certainty. It's probably more certainty of their earnings going forward.
What is actual investing there? So when I'm putting that $100 in that company, I'm buying part of the company.
You're buying part of the business. That's exactly right. So that's why I was saying before, people who want to open up coffee shops and things like that, just go and invest in Amazon, buy some shares in that, and you'll get a better return.
Probably, yeah.
Do you know what I mean? Without the stress, the time, everything.
Well, I remember I was saying this on our last episode. For some people, they're working these crazy jobs, right? They might be earning, let's say, $1,500 a week, but they're working 80 hours a week. Their lifestyle sucks. Their health is going to waste. Their relationships are falling apart.
Yep.
They're getting $1,500.
Yeah.
For me, I've always thought this is why I did Uber, why I did marketing, why I did network marketing, why I've done all these random jobs where I get to control my time, is because even if I'm earning $1,000 a week, but I've got more time and a better lifestyle, that's way better for me. But then what I think about is, for those who've read The Barefoot Investor and have your bucket set up for where your money actually goes, you might have 10% a week that you're allowed to invest or you've allocated to invest. So then I go, cool, that $100 a week, is now going to be working for me even though I'm working.
Yeah, that's right. Exactly right. But it's working for you when you're sleeping.
Yeah.
That's the key. You need your money needs
to be working for you
24/7.
Yeah, and
it is because the NASDAQ, the FTSE, the Dow Jones, they're all open. You know what I mean? So, and really, the markets are probably, heading towards, well, they basically are 24/7 now. So that's what you need. That's why investing in stocks allows that to occur for you. You know what I mean? And you can invest in Apple.
Yeah, it's like as if you wouldn't, if you own a fucking iPhone or an iPad or any of that, why wouldn't you invest in companies? This is just how I think. Yeah. Why wouldn't I invest in companies that have things that I use?
Yeah. Like I think their market cap might be, $3 trillion now for Apple. You know what I mean? So they're massive, and that's something that a lot of people understand.
Yeah, definitely. So
phones.
And if you're excited about something, it's cool to invest in it because then you get more. There's more buy-in to you learning about the company, what's happening in the ins and outs, because you're like, well, they've got some of my money.
Yeah, that's right. So, and as I said, you can invest in all those things: Facebook, PayPal, Bookings.com, Apple, all via an ETF.
Yeah.
All via a NASDAQ ETF. Yeah. Do you know what I mean? So
let's go back to summarising it then. So the first thing to do would obviously be deciding whether you're going to use a broker. Or do it yourself, and you can do that through CommSec or any of those.
Yeah. Bell Direct. You can go and Google Bell Direct, and they'll take you through how the website works. I think they provide you with Morningstar research. Yeah. They'll tell you what a good portfolio would look like.
Yeah.
And also I think with Bell Direct you can have access to overseas shares.
Yeah, which is awesome.
Yeah.
So then the second thing would be, I guess, setting a plan with what's your investment plan. How much are you prepared to invest over 12 months or weekly or monthly, whatever that is, and don't go over it.
Yeah, I'd strip it back to weekly.
Yeah,
to be honest with you. I'd say I'm happy to give $80 a week.
Yep, and stick to that, right? And
or $70 a week. That's $10 a day.
If you really care about for me, if I care about my financial future, and I go, I can't afford $70 a week or $100 a week. And you drink alcohol, stop drinking.
Yeah, that's right.
It's an investment in yourself.
Don't get Uber Eats.
Yeah, there's so many things you can cut out to make that money. And I guess if you're wanting what investing in your future can provide, there has to be sacrifices.
Yeah, that's right.
You can't fucking have it all unless you've got a high salary.
Yeah.
Where you can
disposable income.
Yeah, high disposable. Most people don't.
Yeah.
So be smart with where your actual money is going. Track it. And if you're blowing it on stuff that's not going to improve your quality of life and you're sick of being financially stressed, then look at that. But so then step 2, you've worked out your strategy and your plan.
Yeah. The strategy and the plan.
Anything else you would add in before?
I think you need to really identify how much you're willing to invest.
Yep.
Right, whether that's $5 a day, $10 a day, $20 a day, whatever.
Yep.
You can work it out on a 12-month period and work it back. Yep. You know what I mean? But I think that's the key to start there, yeah?
Yep.
Okay. That's the first one, right? Secondly, find out the product in which you're going to do it with, right? Whether that is going to be
ETF.
An ETF via CommSec or Bell Direct, or CMC Markets, or whether it's going to be via that Raise.
Yep.
I think it's RAIZ. Yeah. I think that's probably the leader in the field in terms of where they...
Literally, it's an app on your phone.
Yeah.
Just download it now.
Yeah.
Raise. I'll actually put it in the show notes.
Yeah. Of where they take, $5 a day, $10 a day out of your account and invest it. And you pick whether you want a low growth, medium growth, or high growth investment portfolio. Yeah. Then after you've gone through that process, I think the next thing is to know that this is not a 1 year investment. You need to have a minimum investment time frame of 7 years.
Yep.
And that people go, it's too hard.
Yep.
You just got to do it.
I think the best mindset I took with that is once it goes out of my account and into an investment, that money's spent.
Yeah. Yeah.
It's like I've just bought carton of beer or a holiday, and you don't get that back. You only get the experience or what you've purchased.
Yeah.
And I know for me how I'm going to utilize my investments and when I really want to utilize them, and it's literally not for a while. So I'm excited to see those continue going, and I do continue adding every month to those.
Yeah. The other thing would be to start to actually understand and get involved within financial markets.
Yep.
And that can be done via reading, and that can be getting the Australian Financial Review.
You gave me some good apps there.
In the morning, Bloomberg.
The other thing I would do is all of these things that Myles is saying, I've made an investment thing on my iPhone. I'm sure you could do it on Android or any of those other subpar. No.
Yeah.
Bloomberg, did you say?
Yeah, Bloomberg, that one.
Yep.
That's the one I gave you there. But there's plenty of apps out there that you can use to better understand or to create a better understanding for you and how financial markets work. The other thing would be, as I said, read the Think and Grow Rich by Napoleon Hill. That's probably
amazing book.
That's probably.
I might give
Bible.
one of those away. I reckon in the new
you
year I'm going to give a few copies of them away. I'll order some off Amazon and we'll give a few listeners.
Yeah, I'll sign them.
Yeah, we'll sign them.
Yeah.
Myles Smith and Stu Doggy Dog.
Yeah. And I'll tell you the hardest thing to do out of all of it, and this is the last bit of advice, is just to start.
Just to start, 100%. Because you said this to me as well, when you actually start, you're going to learn all the stuff that you need to learn. Whereas if you don't have money in it, you're going to go, next week, or I'll read that later, or I'm not worried about that. But when you're in, you're like, I need to learn this because otherwise my money could go.
Yeah. Unless you're invested, you're not fully invested.
Yeah, exactly.
Do you know what I mean? And you don't pay attention to, the market, what happened today when you're listening to Alan Kohler on the ABC or the radio on the drive to work, or, you open the Courier Mail and look at the business section, etc. You know what I mean? You just start to actually see, a whole different world. You know what I mean? So
what we might do, and I'm going to put you on the spot here.
Yep.
Maybe because we've got our 12-week. So the Strong Men of Value, our next intake launches on the 17th of January.
Yep.
So maybe we'll get you back 1 week in those 12 weeks, and we'll have you live on a video call for all the members. So guys, if you want to be able to ask questions to Myles, and we'll probably go through some stuff in depth. Obviously, we've got to be mindful of what the rules and regulations are around the industry, because I am not a stockbroker, so we'll make sure we're doing everything by the book around advice and all that sort of crap. But can help you guys get a good start or whatever that looks like. We'll figure that out later.
Yeah. Today was just a bit of a layman's terms, simplistic explanation of a few things that I do and look for when investing. A little bit about the market. It's very broad in nature, but happy to delve deeper. Going forward, or if anyone wants to.
And one other thing to be mindful of is you can lose money.
Yeah, I think that's a thing.
Fuck, and when you lose, it sucks.
Yeah, I have people who come to me over the course of my career, and they said, I'm happy to take a heap of risk. They're happy to take a heap of risk until they lose the money, and they call me every word under the sun, you know what I mean? So
nothing is guaranteed, so keep that in the back of your mind. And I think you can learn a lot about yourself, and I think a lot of it comes back to mindset and emotional regulation, like understanding how you deal through stress and sometimes success. Some people get ahead of themselves when they have big wins or big growth, and some people absolutely combust with even a $500 loss, right?
Oh, exactly right. It's a real,
crazy.
And the worst thing is to look at your investment.
Yeah.
Because as I'm saying to you, it's not a daily thing that occurs. It's a 5-6 year period. So I can guarantee you, without fail, that if you go and invest $100 in the market today, in 6 years' time, it's going to be higher than that $100.
Yep.
That's just fact.
Yep.
So if you can't understand that and see that it's a great way to make money,
Yeah. So as Myles said, well, first and foremost, thanks for coming on, brother.
Thanks.
It's been amazing. I've taken away so
great.
much from this conversation. I know everyone out there will have as well. Now, as we've said, none of this is advice. This is just
general advice
around things that you can now start to go Google to understand more. Where you can start looking on those financial review, Bloomberg. Go check out some of the platforms. If people want to reach out to you, where would they find you?
Oh, I think go via you.
Go via me. Jump in. The only way you're going to go via me to Myles is in the Strong Men of Value Academy. That's going to be one of the bonuses for our members there. So if you do have questions, gents, you know where the podcasts are launched in the platform there in our community app. Jump there and hit them through, and I'll definitely be getting Myles on for a live video that you guys can all
be a little bit more in depth
and intimate for the guys there. So make sure you apply for that now. Applications are open for the 17th of January kickoff, and I look forward to that. And gentlemen, please share this on social media. I know one of the best ways this podcast grows and the Man That Can project grows is through word of mouth and through you guys. So every time you listen to an episode, you share it on social media. Make sure you tag the Man That Can project and myself. Share it with friends and family that you know will get advice, because hearing it from you guys, they trust you, right? More than just me saying, you should listen to my podcast. If you're a mate with them, they'll back your word 10 out of 10. So definitely do that. And Spotify now has a new rating system. I'm actually going to rate my podcast on Myles' phone in a moment, but if you go on Spotify, you can now rate the show. So if you got value, do that there, or if you listen on Apple Podcasts, do that there. But thank you guys so much for tuning in, and for those who are going to be joining us for the Strong Men of Value Academy Intake 1 for 2022, I look forward to seeing you guys there. It's going to be a fucking ripper year.
Will be huge.
What are you most excited about for next year? Just quickly.
Oh, geez, you put me on the spot. I don't know. As I said, I'd probably like to look at, doing something a little bit different as a side sort of hustle.
Yep.
I don't like to use that word, but as
side hustle.
Yeah, as a side hustle to stockbroking. So I'm not quite sure what that looks like. So might
exploring a bit of growth.
Yeah, do something with you.
Game on.
Sounds good.
Thanks for tuning in, gents.
Thanks.
Gents, that's wrapping up another epic episode with Myles. If you got value from it, please share it on your social media and tag at the Man That Can project and at Lachie Stuart, because remember, every time you share it, it gives validation to your mates who may get value from it, that it is worthwhile investing their time into. So really appreciate your support. Remember, leave that 5-star rating on Spotify and a 5-star rating and review on Apple Podcasts. And I look forward to sharing next week's episode with you.
Thank you for listening to the Man That Can Project podcast. My name is Lachie Stuart, and I hope you enjoyed this episode and found it helpful. If you did, please take a moment to rate and review the Man That Can Project on your favorite podcast platform. And don't forget to subscribe to stay up to date with our newest episodes. We'll see you again next time.